Hello guys, welcome to the trading part. As you can see, we saw another rejection at the top of the falling wedge. But there's one caveat, this rejection was a fake out in terms of the momentum. We saw the breakout around here, and from the point of view of the price, there was no rejection. Currently, the RSI is resting on support, and the right thing to do now is to update this line to this end, because if we leave it like this, we might end up seeing something that also goes slightly beyond, but then it still capitulates. So we need to update our expectation higher to reduce the risk and expand the triangle in this shape. That sets the target now for the breakout to 51 on the 4-hour, and that means the price needs to get above 65.5k in order to fully break out from this structure. On the daily RSI, we continue to fall below the trend line. Yesterday, we saw this candle being above the trend line, but as I explained, we need to wait until the end of the day to see the full breakout if we are even considering to get to this level of resistance at 54. The price on the daily is resting on top of this support located at 64.1 and is testing it right now by the minute with the intention of putting a lower low, breaking below the structure, targeting the low end of 62, 61.8. If we did that, we will complete the full target of the double top that we started trading 2 weeks ago when we broke down with this candle in red below 67. So far so good, we are seeing rejections and it seems to be like we are going to manage to achieve the full target. Yesterday on Nvidia we saw this really ugly candle around here. The previous time that we saw a candle like this, we saw a correction about 21% from the top on Nvidia, and it took over 2 months for a recovery. We also got very close to the top band of the TTP RSI at 83 this time, and we are seeing the rejection pretty much at the same level of the band. We can see as well that it completely lost the momentum around here. We have done a range from 33 to almost 82. There can still be a push here from the longs trying to defend this rally, and it could continue going higher, remaining in this area there. So be very careful if you are considering to short this. Have your risk management in place and prepare to be wrong as well. As a consequence, we can also see that the Nasdaq has printed a warning candle there, just like we did in here, where we had a retracement of 3.6%, but not as big as the candles that we saw in this top, where we have a larger retracement of 7.8. Currently, the Nasdaq hasn't lost the momentum yet, but is on the way to retest the support. On S&P, things look a little bit more calm, still a red candle, but nothing broken yet in the structure. Going back to Bitcoin, what happened with all the signals I gave a couple of days ago that were calling for a local bottom? The social signal coming from lunar crash alt-franc didn't manage to break above the top, so it didn't print an actual buy. It was very close to a buy, and in these past 3 days we see how more and more shorts are accumulating, and now for the first time we are crossing the lower band. The question is, what outcome do we oftenly get when we see a behavior like this, when everybody goes aggressively into a short? So for that, we don't need to go that far back in time. We can see it around here in March, where we saw a few signals from the delta 1, 2, and 3, and eventually this reverted very aggressively with candles in green. We can also see it in this area here, where we started just chopping down, and eventually when we crossed above the white line, we saw another delta signal and we started running back up. In this area here, it looks a little bit different because as soon as we touch the white line, we reverted immediately. And in here, we are just doing this long stare of daily candles, all accumulating more and more and more shorts. At the same time, we have the daily RSI below the resistance, and now we are very close to the statistical band, which is located today at 35.8, slightly higher than this low here. So the question is, how is the RSI going to react right now here? Is it going to put another low and continue this trajectory to levels that we haven't seen in a while, or are we going to see a breakout? I think coming into the weekend, I wouldn't necessarily expect a lot of volatility. In August 2023, we did a low of 19. In January, we started making lows of 36 and 34, and right now we are at 36. The cross-fee ratio was yesterday very close to our level of green, but it reverted back to minus 488. It kind of faked out into the buy area, and we still don't get as low as we got here on the 11th of September, which was an amazing buy. I'm going to continue monitoring these signals, and as soon as I see a break above the white and any signal coming from any of these sources, I will let you know in my Twitter. My handle is Trading Parrot, and that's the place to get notified when there's time-sensitive information. By the way, guys, I hope you're appreciating this video on a Friday. I'm recording before spending some time with family. If you do appreciate the effort, make sure you watch the video until the very end and do not go anywhere without leaving a comment. And a friendly reminder that there is a link in the description to open an account with Bybit. We have a partnership. This is the exchange that I use for most of my trading bots using perpetuals. Currently, there are rewards up to 30,000 using the link in the description. And if you start accumulating trading volume and you deposit enough, we are working with them to integrate with our membership. So if you have enough volume, you will be entitled to either Observer, VIP, or any of the higher tiers in the TTP subscription. Today, we are getting closer and closer to the bull market support band, which is currently located at the same price as the actual price of Bitcoin. But the lower band is at 61.3. Last time, we touched the green band and we immediately push back up. But now the red band is at the top. The last time that we came into the red band was here. We spent some time below the bull market support band. The exception is here, where we also touched the red one, and then the green one came to the rescue, and then we have a big, large candle to the upside. ETFs continue the sell out, so nothing new coming from this end. Willy Woo is updating us as well on the hash ribbons. He says, when is Bitcoin going to recover? It's when with weak miners die and hash rate recovers. This one is for the record books, as it's taking a lot of time for mining capitulation post-halving. Probably can thank ordinary inscriptions boosting profits. You can see that it only took 8 days and 24 days, and in here it's taking over 61 days to recover. And if that wasn't enough, Germany sees 50k Bitcoin and has sold around 3k BTC so far. The surge in BTC price has resulted in 1.1 billion unrealized profit, increasing the value of their current holdings to 3.24 billion. And in here we are seeing the order book yesterday. I do not spend that much time looking at the spot order book. I mostly look at the perpetuals, and now I'm regretting not having had a look yesterday at spot on Binance. You can see the orders appearing of 300, 300, 100, 100, and 100. All of that stacked right above the price, being massive selling pressure, and pretty much that was the reason why we saw that huge rejection yesterday when we were actually breaking out. And a word of warning on the S&P, this is something to take in consideration. The S&P, after this sort of signals, can continue to rally for months, years. This chart is showing multiple years, and whenever the damn money is fully in the market invested, that tends to signal the beginning of the end. Although you see the signal topping in here, it can get very confusing because we do not know if this is an actual top. There can be more damn money coming in just because there's a lot of additional money in the market. M2 is currently printing. So not just because we are as high as we were before in this green line representing the consumer confidence, we can conclude that this is an actual top of the consumer confidence and that therefore the S&P must crash today or in the coming weeks. And another consideration is that you can see here that once it tops and the consumer confidence starts coming back down, you can still have even half a year of upside in the S&P. So yes, it's a topping signal, but it's not very precise and very accurate in my opinion. What is slightly concerning is seeing Nvidia printing this massive red candle engulfing. Yesterday, it plummeted from over 140 to 130, and post-market, it was already showing lower than 130. In my opinion, if we look at the past performance, whenever you get a candle like this, we could be heading between 115 and 110. And I'm not necessarily worried about Nvidia. Nvidia already looks like a bubble. I wouldn't invest on it right now. But my worry is the effect that Nvidia may have in the rest of the market. Remember, this rally that you're seeing in the stocks is 70% driven by hero stocks, and Nvidia is the one leading the pack right now with the profits. The rest of the stocks in the S&P are either going sideways or even bearish, and that indicates that the market is not having a healthy run. Can it continue like that? Sure. But every day that we continue in this situation, the market gets riskier and riskier. Thanks so much for watching. I'll see you in the next one. Take care. Bye-bye.